This is Khalid Nathan Aleem, the real estate boy, and welcome to another episode of Real Estate with Soul. On these episodes, I look to interview different brothers and sisters who are in the real estate field. And today I have no other than Robert Farmer. Welcome to the show, Rob.
How you doing?
I'm good, man. Thanks for asking. Um, Brought Rob in. I've been looking at Rob from a distance for a long time now. He's definitely been doing his thing, man. Rob, why don't you tell us? And do you go by Robert, Rob, Bob, or
Robert, either or you
okay?
could call me
Well,
Farmer.
Rob, well, why don't you tell us about yourself, what you do, what you got going on, and we'll kind of take it from there.
Well, I'm currently a branch manager at Acre Mortgage. I've been doing this. I've been back at Acre for 10 years now. I've been in the mortgage banking industry for 25 years. It's Florida, but now I'm still doing business down there out of co-op space. Um, it's probably why I've been doing it. It's been very rewarding. And I love working with helping people, achieve their dreams as far as home ownership.
Gotcha. Now you've been in the lending industry for 25 years, so you must have seen a lot of changes, man. 25 years ago, market was very different than it was right now. As far as you personally, how did you get into the mortgage lending industry?
Just had a son and I needed a real job. And back then the rates were like about 7.5%, 8%, similar to where they were a few months ago. But what I've learned in over the period of time that I've been doing this is the borrower always makes a way. When I first got into the business, FHA was only 2.25% down. And if the house was under 50, it was only 1.75% down.
Wow.
As they changed, people would get in and up for, oh, now it's 3%. People made a way. Now it's 3.5%. We were in an uproar then. People still make a way. So what I'm finding is with the interest rates where they are, this is interesting that you mentioned that. I'm finding now the seller can kind of dictate what's happening as far as how fast houses move, because I'm looking at, I look on realtor.com and all these other places, and they're dropping houses by $10,000, $15,000, $20,000. I see that in
Right.
Tampa a lot. Give it to the buyer as far as sellers assist. Because what I'm finding is people can make the adjustment to the payment. They're having trouble coming up with the money.
Right.
And if you put a listing up and say $15,000 towards closing costs, I guarantee you will get action. Rather than waiting 2 or 3 weeks to drop $15,000 off the sale price.
That's interesting. That's super interesting. So what you're saying, just to reiterate, is you got a house on the market, realtor, you got a house on the market, and instead of promoting a price improvement of $10,000, put in your details that, hey, I'll give $10,000 back in seller's assist, and that will motivate. Okay, that definitely makes sense. I never
Because
thought about it in that way.
what it allows the buyer to do is to buy the interest rate down.
Right. Okay.
And make his payment more attractable to him.
Okay. Wow. Yeah, that's definitely a gem for all y'all realtors out there. Instead of doing price improvements, give them $10,000 and let them know that they can either use it, and correct me if I'm wrong, but either they can use it toward their down payment, or they can use that money to buy their rate down so they can get a lower rate.
Not towards the down payment, because you still, if it's whatever it is, if it's 5% down, you still have to have your minimum contribution, but towards closing costs.
Okay, gotcha,
Discount
gotcha.
points, title, all that other stuff. Because what I'm finding, some households, they're making enough money to cover a payment that would have been $200 or $300 less a year ago, but it's coming up with the down payment because to get a better rate, you're going to pay the discount points. Well, if the seller pays it, it gives them a lot of leeway as far as money to get into a home.
Okay, yeah, I mean that's super genius, man. I think that's all the realtors that are looking at this is that's definitely something that they can use to improve their businesses and get those listings that are not moving, get them to moving. So, you said that you're with Acre Mortgage right now.
Yeah.
Okay, did you start out with them?
Now I started out with what was the first back in '97, Long Beach Mortgage. We were doing subprime. Was there for 2 months, and then I got into the purchase side of it with North American, Centex, Sunset, and then I was a sales manager at Wells Fargo for a little while. That was uh, that was interesting to say the least, just because of the size of it and inability to get loans closed because they do so many.
Now, it seems like in lending, it just seems like it's like the wild wild west, meaning that it seems like anybody can just open up a firm and then I don't know, start lending money. Is that how it actually is as far as what does it take for
That's how it
somebody to
actually
open a
was.
mortgage up? Okay.
That's how it actually was 25 years ago. You could go in and go to a beauty salon, get your hair done, do a mortgage application in the back. Once 2008 hit and the market crashed for all those whack loans that they were putting out,
Mhm.
um, now you got to get tested. You got to be registered, background check, fingerprints, the whole none of the stuff that they didn't have to do before. You have to do now, which basically weeded out a lot of the nonsense in the industry.
Okay, so there is some formal things that you have to do in order to be a lender.
Yes, you have to. Again, you're looking at 21 hours. You have to do 21 hours of class work in order
Mhm.
before you can sit for the banker's test. You have then after that you have to do your individual state stuff. So each state, like I'm licensed in PA, Maryland, Florida, and New Jersey. So I have to go take a class and pass their little test to and then pay a fee, maybe background check and what do you call it? Fingerprints before
Okay.
they'll, each state will individually license you.
Okay. All right. So yeah, I thought people just and unlike realtors where if we want to get licensed in another state, we have to take a test for that individual state. Is it the same thing in mortgage or is it just paying a fee for that other state?
In some states, it's like it's just paying a fee. It's
Okay.
um hold on for a minute. Some states, like in Virginia, is just paying a fee. Pennsylvania, Jersey, you got to take like a 2 3 hour class, and you have to pass a test.
Okay. Gotcha. Gotcha. Okay. Well, that makes sense, man. Um, Also, I want to ask you as far as let's just talk about the black side of things here. You as a lending officer, because I have my own particular views on this, but when you see different news articles saying, for example, that blacks are 3 or 4 times likely to be turned down by loans, or that uh, black home ownership right now is at all-time lows. I guess what's your thought on the situation or the state of black home ownership right now, and where are the issues?
I really think it comes down to education
Mhm.
because the guidelines are set. They are what they are. You meet
Right.
them, you get approved. I mean, as simple as that. I've never had a problem with someone that met the guidelines that did not get approved because one, I wouldn't allow it. Two, the companies that I work for it just doesn't, we don't operate that way. Some of the stories I hear, I think it comes down to sometimes people don't want to deal with the smaller loans. Sometimes people don't want to deal with people that aren't as educated and they have to explain stuff to them more. But that's
Mhm.
all part of your job,
Right.
you know. Um, And if you take a $50,000 deal and treat it like it's a $500,000 deal the same way, that's how it's supposed to be done. Because guess what? That one guy that's buying a $500,000, that's his $500,000 dream. This other one buying a $50,000, that's his $50,000 dream. You know, in any event, it's still a dream. So your
Right.
job is to be there to help them achieve it.
Right. No, I definitely agree. And what you just said, I think is a big, in my opinion, is a big factor as far as getting somebody that cares. Because if you
Right.
do get a person, a loan officer or a realtor that you randomly just got off the internet, or you just called a sign that you seen, and there's really no connection for the most part, and they don't care about your particular situation, treating you just like a number, then yeah, you may have the 3 times or 4 times more likely not to get a mortgage. The reason being is because number one, your stuff may not be straight. But I always tell people when they speak with lenders and you speak with a mortgage loan officer, make sure you tell them everything. Everything. Make sure that you tell them everything.
It's just like when you're talking to your lawyer. Same way. Give them the whole story. Because if you give it to me up front, sometimes there's a lot of ways where you can work around certain situations rather than them coming up in the middle of a deal and you're under contract.
Right. No, definitely, definitely, man. Well, let's get into these mortgage rates, man. Let's talk about these mortgage rates. Got a couple of slides here and kind of get your opinion on these, man. So first here we got, again, we're talking about mortgage rates. And this first slide kind of shows the mortgage rate trend. So it's going from June of last year up until right or last month, February of 2023. And as you can see, we're kind of inching up to those 6.5, man. How do you feel about this?
Again, I mean, the rates are what they are.
Hmm.
I think a lot of times people are more concerned with what their payment's going to be. So when you're looking, the rates are going to be there, but you have to take into consideration property taxes, homeowners insurance, things of that nature, as far as what that bottom line payment's going to be. Because
Right.
they're going to go
And the
up, they're going
news.
to come down. And one thing about the rates, what happened was the Fed rate was at zero for a long time. So
Hmm.
would have been at zero, then that was why you saw rates at 2.25, 2.75, 3%. Well, now when they start taking these hikes, well, they're going to sell it to the bank for 4 or 5%, and banks got to make their money, so they're going to probably put another 2% on top of it. That's why you're
Right.
sitting at right now. Fed rate's probably at about 4.5 or 4, but the banks are going to put it out there at 6.5.
Right, man. It's like the wild, wild west out here, man. Um, This is coming from a chief economist that says the economy is showing signs of resilience, mainly due to consumer spending, and rates are increasing. Overall, housing costs are also increasing and therefore impacting inflation, which continues to persist. Now, when we're looking at the economy, and a lot of us are on these different social media platforms, and we're also looking at the news where they're talking about the reason for these hikes for more or less is inflation. So as we see, the economy is kind of not slowing down, as this chief economist is saying that it's showing resilience because people keep on spending money. People keep
Yep.
spending money, and rates are increasing. So the overall housing costs are also increasing, and it doesn't seem to be any end in sight because of inflation, man. What's your thoughts on that?
I think that housing prices are going to come down because if
Hmm.
they're not moving, again, what they're either going to lower the price or provide some sort of seller's assist. But I don't see them going up, continuing to go up like they were, post pandemic. And
Yeah,
people are
me
still
either.
spending money.
Go ahead. You go ahead. You can finish your thought.
No, that's what I'm saying. And people are spending more money. So I mean, even with the cost of stuff, spending is still up. I mean, unemployment is really low. So more people are getting jobs. So I still think there's going to be, you can get a house now and refinance later when the rates come down.
Right. As the old adage goes, you buy the house, but you date the rate. So you can buy
Right?
a house
Marry the house,
now.
date the rate. Exactly.
So you buy the house now and buy what you can afford. And really, I think that the mortgage industry has done a great job, or maybe they've been forced to do a great job as far as the limitations and the different criterias that they have when people spend money now. I mean, you've been in the business for 25 years. So you've seen the time where you had your countrywides, where if you could breathe, they would give you a loan.
We'll give you a mortgage. Yeah. Called up a mirror. And that's what caused the meltdown of 2008. I mean, people were buying these notes and they were just really bad notes because you were putting a person in a $400,000 house with no money down, 28 mortgage, and that first bump on that interest rate would be so high, you wouldn't even be able to make the first payment. In some cases, they were going in without even reserves. You're having a lot of early payment defaults.
Wow. Right. And now what we're seeing, and I don't know if this happened in the last couple of months, but the reserve requirement has seemed to gone up for different individuals for these FHA
That,
loans. Can you speak to that?
yeah, that's credit score driven. Credit score driven and debt ratio driven. Because when you run it through the computer is going to tell you it's going to give you an approve eligible or refer eligible. Well, if it's a
Mhm.
refer eligible, that means it has to be manually underwritten. Well, you try to stay away from them because the approve eligibles give you a higher debt ratio limit. But in many cases, if you have a deal with no reserves or zero money left over after closing and the credit score is say 620, they're going to ask you
Mm.
probably for 2 months reserve. If it's 780, they're not going to ask for it.
Okay. So his credit score is kind of dictating those
Credit
people
score
needing
and
more.
debt ratio. Credit score and debt ratio. See, if you got a 640 and your debt ratio is 55 and a half, they're going to ask for some reserves.
Okay.
You see what I'm saying? But if you had 20 35 on the back and say you're 720, they're not going to ask for reserves.
Okay. Gotcha. Well, we got to get our credit score up. I mean, that's what I teach continuously to people is getting their credit score up because I mean that dictates a lot when you're dealing with buying a home. I mean, first of all, you got to have a certain score to get in the door, but there's more hoops you got to jump through when you have a low credit score. So let's keep this moving. This right here is showing for the past 50 years, and you just spoke about this as far as the 30-year mortgage rate has moved in unison with the 10-year treasury yield, and the spread has been 1.72. So it's kind of like as the treasury yield moves, the 30-year mortgage rate moves. I don't, what's your thoughts on this?
Well, the treasury rate a lot of time moves when the stock market's down
Mm,
because then people take the money out of the risky stuff and put it in bonds. That's what drives that 10-year note. So the more money they put in there, that yield comes down, which drives interest rates down. That's why you see it going with it. So the more money that they're putting into say bonds in general, because say the stock market is volatile, and you
okay.
see a hit of normally if you see a stock market hit of say maybe where it drops 600 points in a day, a
Mhm.
lot of times that next day you'll see interest rates a little low because the people have pulled the money out of the stock market and put it back into the bond market.
Gotcha. Okay. So if somebody is really rate sensitive and are kind of tracking these rates, what you're saying is that if you're looking at the stock market, those investments, a lot of times people are either buying stocks or buying bonds. So when the stocks are going down, they're taking that money out of the market and they're putting that into the bond market. They put it into the bond market, the
The
rate
safe
for the
investment.
bond goes
Right.
up. If the rate
Exactly.
for the bond goes up, then the interest rates for the 30-year fixed mortgage goes up also.
Right.
All
Because
right.
usually when you see the
Got
stock market going up, you're going to see interest rates creep up a little bit because people aren't putting the money in the bonds.
Gotcha. Gotcha. Okay. Well, yeah, we should definitely, as realtors and as real estate professionals, keep your eyes on the stock market. Definitely. Let's see. I had some questions here. Okay. Let's move on to the next one. All right. So right here, we're looking at the spread, and I guess this is what we're getting to with these slides. As far as the spread itself, if you're taking this spread, I think this is the beginning of the year till the end of last month. The spread has been even more um, versus the average is 1.7, but from the beginning of the year till now, the average is 2.7. What's your thoughts about
Hmm. Banks are making their money.
that?
I mean, it's just right there.
uh,
And,
Banks are
that's
making their
usually
money.
an across
Explain a
the
little bit.
board thing. Excuse me?
Say, I said you said that banks are making that money. I said explain
They make,
a little
oh,
bit.
yeah, they're making more. Well, they're putting as you would say, they're getting it from the Fed for a certain price, and then they're just putting a little bit more on top of it. You know,
Gotcha.
everybody
So
just
are
seems
are
like
they
they're charging
opportunists
more.
here?
I would say in some cases, yeah. Yeah, I would say in some cases. Because again, I mean, I guess they feel as though they have to make what they have to make with what they put on the street. It's been so low for so long, because I mean, you had rates in like 2.75, 3%. Um, and they're just padding it a little bit more.
Okay. Now here's the thing,
Because
and
probably they're padding another reason why they're padding it more is because business has slowed down. So now they got to make more per unit. Let's just say if we're using it from a standpoint of units sold or whatever.
mhm.
They're not doing as much, so they have to probably make the same amount of money, so that they're just putting a larger margin on it.
You just touched on something. What you're saying really, and what we've definitely seen, is the activity has been down. The activity has
Right.
been, especially in Philadelphia, activity is down like a quarter or more than it was
Philly's tough
last
right
year.
now.
Say it
Philly's
again.
tough. I have a lot of clients, and Philly's tough right now. And I have a lot of clients that are getting outbidded for houses. There's not enough. Florida, things are moving a lot smoother down there,
Mm,
and the
okay.
prices are slowly coming down. You're seeing price decreases daily.
Right. Right. But no, I definitely like what you just said as far as it, and it makes sense. If activity is coming down and banks still have to make their margins down, they're increasing the spread. They're putting a little bit of flavor on the top so they can make sure that
Hmm.
they make the spread. Okay.
Because of the lack in activity.
Right, right. For the activity drop off. Now, can you speak to the different interest rates from different companies? Because there are people who think that, okay, if the interest rate, for example, here, if the interest rate is 6.88, then it should be like that at every bank. Can you speak to that? Or a mortgage company?
Well, like your credit unions are going to have your lowest rates,
Mhm.
but then you can't catch that guy up to 5 o'clock either. This isn't a 9 to 5 business,
Right,
so he's on salary. So he's
right,
probably not getting paid nowhere near as much as a broker or a mortgage professional will get paid because we're round the clock. We don't answer our phone, they're going to call someone else.
right.
So, okay. So, I just think it boils down to like I said, if you got people give you Rocket Mortgage, I'll use them as an example. They pull these kids out of college, they get them licensed, they give them a salary, and they put them behind the desk in their
Okay.
call center. So people calling in, you know, I get a lot of deals that come from there because they're not really thoroughly approved,
Right.
but they have good rates in some instances because the people that are doing the loans don't get paid that much.
It's funny that you speak on that because a lot of times when I'm doing home buying seminars, I kind of let people know there's a difference between a bank and a mortgage company. And with the banks, they're really looking for, in my opinion, they're really looking for straight up and down grade A people or buyers. So
And you
they
know
don't
what they're
really.
called? Not to cut you off, but I'm glad you brought that up. It's called overlays. And what an overlay is what a bank, as you say, or a mortgage company will say, well, I know FHA will let you go to 56, but we're going to stop you at 45. They have their own rules inside of what the actual guidelines are.
Okay. Okay. Got you. Got you. So I guess that plays in what I'm saying as far as they really want the best buyers out there. So their loans are are a little cheaper than mortgage companies, but you're going to lose on the service because I've seen because of the processes of different banks, and there's some good banks out there, but because of the rigid processes, the loans fall out and it can't get done for whatever reason because they're a little stiffer than mortgage companies. Has your experience been like that also?
Yep, exactly.
Okay, gotcha, gotcha. All right, let's move to the next slide here, man. All right, so this is talking about the 30-year mortgage rate versus the 10-year treasury yield. So we're just talking about as the treasury yield moves, the mortgage rate moves, and we can see here that we've had a run up. I mean, I think we were living a good life for a long time, where the
So
Fed
that.
interest rate was at nothing.
Mm-hmm.
Now, how many people from your own experience, you can give us a couple of your stories. How many people were you not begging, but pleading to either refinance or buy a home? And they were looking for interest rates to go down to 1% or go down to 0.5%.
A lot. Yeah, exactly. I mean, really. I mean, we're here still. Well, I heard it's only 1.75 over here, or
Uh,
whatever. And I'm like, it's never going to be free, And they were all everybody was looking to chase that lower rate. See where it is now, though. The reality is set in. Okay, rates are a little high, so you're going to see rates a little high. I get less shopping around now than I did then.
wow. Wow. That's crazy. That is absolutely crazy. And I mean, that's one of the things that's affecting the market now. And that's why inventory is so low. It's because you got a bunch of people that refinance like me. I have a on one of my rental properties, I have a 2.6, a 15-year mortgage at 2.6. So people who got those, I was talking to a guy yesterday, he got a 30-year mortgage like at 2.2%. These people are never going to sell those homes.
Mm-mm.
So so that's something that's adding to the dearth of inventory that's I mean that we're seeing right now. But you're saying people are shopping less now than they did back then.
Yeah, I mean, my clients, because
Hmm.
like I said, we have a lot of stay in touch with client stuff with the CRMs, where emails are going out on the regular and stuff like that. And some people, the people you run into people that are looking to buy or upgrade or downsize or whatever the case may be, and they just come to the realization. I mean, the news every day on the news, interest rates are up, interest rates are up. Every day, interest rates are down, interest rates are down. They're going to go shop to find the lowest rate. When they're up, 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 they're not. It doesn't really. They're like, okay, I'm going to pay anyway.
Right, right, right.
Just make the
No,
deal
got you.
smooth, get me to the table, get it done. And that's
Let's keep it
that's
pushing.
pretty much what we do.
Right, gotcha. All right, now let's move on to the Mortgage News Daily Rate Index 30 years. So this is showing as far as when the interest rate goes down, buyer demand goes up. So activity goes up because people are more inclined. And again, that's another reason why you have an activity fall off right now is because people who would have normally bought during this time because of those interest rates being at all-time lows, they got in last year or 2 years ago versus their projected buying time was right now. But this is just showing which is common sense, as mortgage rates go down, buyer demand goes up. And right now, I mean, we're approaching 7%, man. I mean, what's your predictions? Do you think it's going to go to 7%?
I don't know because I'm not there. And I mean,
Hmm.
with the section that you're showing here, good buyer demand, that's where that's where I see right now. Because I'm around six and five eighths area there. That's a good chart.
Okay. Gotcha. Okay. Well, yeah, as long as we don't get back up to this 7.5 and get off this chart, man. And people got to understand it. And I always tell people this, historically we're kind of at average rates right now. So it's
Right
not
now,
it's
yeah.
not off the charts and it's not super low,
Mm-mm.
but we're really at average rates right now.
And see, even in the sevens where you have that limited buyer demand. Well, if you're trying to buy a duplex where you're going to rent the other unit out, kind of don't care. Get me that
Right.
property and get me a tenant.
Right, man. All right, this one to close it out, man. This was said by the director of research at NAR that mortgage rates increased further this week following the bond market trend, like we've been talking about the whole time. The average rate on a 30-year fixed mortgage rose to 6.5% from 6.32% from the previous week. Even with the increase, owning a home is still affordable for Americans if they can put 20% down. The monthly mortgage payment is 1,880 for a median priced home. Now this is not local. This is nationwide. I mean, her saying this about the 20% down to me is a little bit out of touch because
Yeah.
when's the last time that you did a loan for owner occupied where somebody put 20% down?
I mean, I do them. I do them.
Right.
But that's not the norm, and that's what I'm saying. If that rate is 6.5 with 20% down, it's probably 6.75, 6.875 with 5% down.
Gotcha.
Because that
Yep. No,
dictates what
that
your rate is as well, how much you put down
right. And
with
people don't know
conventional.
that.
No.
For
Because they'll see a rate. Oh, I got a quote from Wells Fargo. It's ba ba ba. I said, well, okay, now you go look, go read it again. It's 25% down, 740 credit score. All these criterias on top of it to get
right.
that rate. Well, if you're putting down 5%, you're not going to get that rate.
People got to understand that. I mean, I run into that all the time where individuals that being on the realtor side, it's a little bit harder because sometimes they think that you have a dog in the fight. And it's like, hey, I don't have a dog in the fight, but just know this is what goes on. They entice
Mm-hmm.
you with the rate, lock you in, and then it's kind of smoke and mirrors. Oh, well, we can't do it because of this. We can't do it because of that. And so your interest rate is this versus that mailer that I sent you that said
Right,
5%. That's for
right.
different buyers, not you.
Mm-hmm. And I'm gonna tell you honestly, the top realtors that I work with, they know the mortgage game, and vice versa.
Right.
Because I mean, to sit down and have a consultation to say, "Oh, I don't know," because they're gonna ask you mortgage questions.
Exactly.
The more you know, the more you come off as an expert in the industry, not just as an agent, but in
Right.
the real estate industry.
Totally agree, man. Totally agree. So right now we're in March, man. What do you see for the future of the market? I mean, interest rates, activity, all of the above.
Well, you got your spring activity coming up. You have
Hmm.
tax refund checks coming in. Okay, and you got sellers that want to sell houses. Well, it depends
Right.
upon where you're at, though, really, though. But I think with everything in play, like I said, with the sellers kicking back to help the borrower with closing costs, with your tax refund, I think we should have a pretty strong second quarter.
Nice. And that's what I do see a lot of experts saying that either they're saying that or what they're saying is by the third or fourth quarter, it should kind of mellow out because it's like it's if we're a race car driver, it's like we're in the turn right now. We're hugging the turn right now, and then the straightaway is going to happen again. Uh, some people say like during the second quarter or after the second quarter. So we'll see. We'll see, man. Um, for any buyers that are watching, man, I guess what are your three top tips for buyers? Any buyers that are looking that they're about the first time home buyer or somebody that's looking to upsize or downsize, they're looking to buy a home with your 25 years experience. I guess what are the top well, first let's do it like this. What are the top 3 mistakes that you see people make when buying a home? Putting you on the spot.
Large deposits in their bank account, that's one. And I can get
What
into
is that?
season and money. I'll go into that after this. But I also see a lot of disputes. When you have a dispute on your credit report, if it's over $1,000, FHA doesn't lend with open disputes. So you have to get that dispute resolved or removed. And once you do that, we have to re-pull credit because your credit score is going to adjust after the dispute. That's why they don't allow them, because the minute you dispute an account, your credit score goes up. So when you get rid of that dispute, it's going to readjust to what? Sometimes it goes down a little bit. Sometimes it doesn't do anything. But that's what I'm seeing a lot of. Like I'll see collections and charge offs, and they're in dispute. So when I run it through the computer and get an approval, it'll tell you any disputes over XYZ, the file has to be manually underwritten. When now you come into a different set of rules now,
Mm,
because you want that computer approval. So what I normally do is I basically have them go online, call each bureau, and remove the dispute. Once it's removed, we repull. I haven't had one dispute removed where I didn't go on and close the deal, so they didn't change their score that much.
gotcha. So what you're saying is that if you're looking to buy a home and you need to look at your credit first, and Credit Karma is a terrible place to get a score, but it's a good place to actually see what's on your credit. If
Right,
there's any
exactly.
if there's any open disputes on your credit, you said over $1,000, they need to be settled. Now, when you say settled, because I know if you
Not,
have
it doesn't have to be. It doesn't
collections
even have to be settled. It doesn't have to be settled. Just that language has to be removed, where it says dispute resolved.
dispute resolved. Okay, dispute resolved has to be on there or has to be removed.
No, it has to be on there. They're not going to take it off.
Okay,
They're just going to change. They're going to have to change that language, basically stating you're no longer disputing the account or the collection or the charge off.
okay, okay, okay. Gotcha, gotcha.
It
Okay, I
doesn't
just
even
wanted to
have to be.
clarify that.
It doesn't even have to be paid off. But they want that language removed, because when that language is on there, you're getting a false credit score, because when that language is on there, your credit score gets pushed up.
Gotcha. So I look at my credit. I have a collection on there.
Mm-hmm.
That's not the issue. The issue is if it's in dispute or not.
Correct.
Okay. If a collections is on there and it's just open, there's an open collection on me. Is that an issue?
They may not be required to be paid now,
Okay. It just
because
if
your
it's
score,
in
because
dispute.
you're getting an accurate raw score, because you got a score on there with the collection. Now, when you put in the dispute, you're denying the collection, so they're not going to hold that against you. They're going to boost your score up. Whereas that collection is going to bring your score down. So if the collection is not in dispute, I'm getting the actual score.
Okay, that makes sense. That makes perfect sense. Okay. What else you got for us?
Seasoning money,
Mm,
large deposits.
okay.
Do
Explain.
you know how many months? Do you know how many months money has to be in the bank for the bank to not question it?
3?
No, 61 days.
61 days.
So I tell anyone
Okay.
who has money sitting in their house, what's the day? The third, right?
Mm-hmm.
Up to 9, whatever that number is, before you report, go dump it in the bank. The fourth. On the 5th of May, go get a 60-day activity statement, not the bank statement, because the bank statement is going to show the money going in. But an activity statement signed and stamped by the bank for 60 days is going to show the money already in there, and it can no
Gotcha.
longer
So
be questioned.
so let me break that down a little bit for the audience. So when you go to get a loan, the bank is going to question certain monies that are in your bank account. They're going to question if they aren't seasoned. So this is about whether the lender is going to question this money or not. Question it meaning that they need to know where it came from. So
Right,
if the money has been sitting in your account for 61 days or longer, they're not going to question it. For example, let's just say, and I've seen people do this, is where they may get a business credit card. And I'm not saying to do this, okay? But they may get a business credit card, take the money off the credit card, and because that business hold or debt isn't showing on their personal account, they can take that money from that credit card, put it into the bank. Now, if you just put it into the bank and then go to try to get a loan, the bank's going to ask you where did this money come from, and now you got to track it. But if it's been in there for 61 days or more, to them it's yours, and they're not going to ask you where this money came from. Correct?
that's correct. Mm-hmm.
So just make sure you guys plan when you're going to get monies, or when you're going to get a loan. Just make sure you plan. So okay, no, that's a good tip, man. And one more, you got one more for us?
Uh, you said one of the challenges that I see.
Right.
Um, they're the two main. Nothing really out of the ordinary that I've seen, but they're the two that gives me that where I get snags on.
Okay, okay. And maybe just one more tip, as far as not many issues, but one tip that home buyers should do um to improve their loan file before they get to you.
Have your credit cards paid down, you know,
Okay.
because that's going to improve your score. Um, have a plan and know what you want to spend. I think that's the most important part because people were like, "Oh, I want to go buy a $500,000 house." Well, that payment might be $4,000 a month. Where do you want your payment? I want it around 2,500. Okay, so now I asked them first, what do you want your payment?
Right.
Okay, this is where that's going to fit, depending upon your property taxes. Because you could say you want your payment for 2,500 and be in Delaware where your taxes are only 2,500 a year, or you could say
Right.
2,500 and be over here in Jersey where your taxes are 7,500 a year. That's
And
going to
listen,
change how much
night
you
and
can
day.
buy. you
Right.
know, that's going to
Night and
change.
day.
So yeah, so you got to know where you're at, know where your tax structure is, and again, the best thing you can do for your lender is to tell them where you want your payment, because then you're going to get a realistic look as to what you can afford to buy. Because again, they don't have a lot of clients don't have an idea of what a house costs with taxes and insurance and maybe PMI
Right.
in retrospect to that payment that they want to pay.
No, that's super important. That's super important. Oh, I want 100,000. Oh no, I want a $400,000 house. I want a 500. I want a $600,000 house, but I don't want the payment.
Yeah, and they see
And
that
that's
payment, they're like, "Ho, wait a minute,"
no, no mas, no mas, no
No,
mas.
that's right.
All right, man. Well, listen, man, it's been a pleasure, Rob. Why don't you tell
Nah, I
people where
appreciate
they
it.
can find you?
I can be reached at Acre Mortgage. Well, my site is robertfarmer.acremortgage.com. That's where you can apply. On that site is all my contact information. I answer my phone probably up until 9 o'clock at night, and really easy to get along with. I mean, I'm gonna tell you if you can qualify, if you can't. We're not gonna beat around the bush. But 90% of the 99% of the time, unless you quit your job before you close, you sign papers, you're going to close. And I have had
Nice.
people quit their job a week before closing, and we find out the day of closing that they're no longer employed.
Yeah, man. We got some war stories, man, in this game, man. All right, y'all. This is Colin Nathan Aleem, the real estate bull. Thank you for joining us for Real Estate with Soul. And we will see you next Friday, God willing, at 9.